Hi, this is Samer Halal, your trusted financial advisor from Cleveland, Ohio. And today I want to talk to you about dividends. Companies pay dividends from their earnings, where they take a portion of their earnings and distribute it to their shareholders. Those dividends are typically voted on and approved by the board of directors of those companies. And usually those companies tend to be more on the mature side in their business cycle, where they're not having to maintain a lot of their profits to reinvest back into the business. Dividends in the United States are typically paid on quarterly basis. And this is where the issue of dividend yield becomes important to investors and financial advisors. But for some reason, that concept tends to be a little bit confusing. So I want to use an example to describe what dividend yield is. Dividend yield is basically the rate of return that you receive as an investor on your investment strictly from the dividends. And it's calculated by taking the amount of annual dividends the stock is paying and divide it by your cost basis per share. So here's an example. Let's say a year ago, I purchased 100 shares of ABC stock, and I happened to pay a $65 per share. And my dividend yields in this case, I would take the amount of dividends that the company is going to pay me, ABC, which happens to be $1.20 over 1 year, and then divide that by my cost basis for the stock, which is $65. So 1.2 divided by 65 gives you 1.85, which is my dividend yield. That would be my rate of return strictly from the dividends. Now, let's say a year later, yesterday, you happened to buy 100 shares of ABC, the same company. But you happen to pay $60 a share just because the price of the stock went down. And ABC going forward has not made any changes in the last couple of years to their dividend policy. So they continue to pay $1.20 per share per year. They haven't increased it, they haven't decreased it. So your dividend yield is projected to be 120 divided by 60, which is your cost basis per share. And the dividend yield in this case is 2%. So this is where two different investors owning the same company receive different dividend yields, because that is determined based on their individual cost basis. Okay, I hope that example helps. Keep in mind that dividends alone are not really considered a measure that is utilized to purchase a company, because sometimes a high dividend yield indicates that the company's stock is declining in price, and that could be an indicator that the company is facing some financial trouble. So a dividend yield is a factor, but it's certainly not the primary factor, nor is it the only factor. I hope this helps. If you have any further questions, please reach out and let's talk. Have a wonderful day.